Oh, hello, future bees. Hope you're doing well, investing, continue to grow, and continue to create wealth. Today's video is about answering a question. Sabina had posted a great question that I didn't want to write. I think making a video is a better option here. And just wanted to say thank you, Sabina, for a great question. And I encourage everybody to continue post questions or comments that we can talk about. This question was originally posted on May 26th. I was a bit busy, and the question required some detailed explanation, so I didn't want to write this down. The question was that Warren Buffett, who runs the company Berkshire Hathaway, in his portfolio, he has 43 stocks. Occasionally, we see him on television and preaching that one should only invest in 5 to 6 businesses and not more than that, and they'll do fine over time. Why is that he's investing in himself in not large number of stocks like 43, but telling everybody else small? This is because of different reasons. Number one, his portfolio is deceiving with 43 stocks. It truly has 43, but he has a lot of managers. He has a lot of other companies underneath that also buys shares under this umbrella, so they add up. But every time when there's a transaction that's happening in billions of dollars, it's generally him. But if it's a billion or less or 100 million or so, it's somebody else making that transaction. So that also brings the portfolio up. And he has no say in what others do. He'll just let them do everything. Now, but when we look at his top holdings, which we all think he's making it, and he usually tells them that he's making these investments, that would kind of answer the question. His top 5 holdings are about 70% of his portfolio. His top 7 holdings would probably come up to 80% of holdings. And if you look at his top 10 stocks that he's holding is about 85% of the portfolio. So you could see that how concentrated he is. And to emphasize more, I'll tell you his top 5 positions. His Apple is about 36 to 37% of his portfolio. Bank of America is about 11%. Coke is about 10%. American Express is about 7%. Wells Fargo about 5%. Kraft Heinz is about 5% as well. So you could see how concentrated he had made. Now, why is this way? So let's talk about different factors. Number one, he says if you are very spread out into a lot of companies, 2 different things can happen. It's a large pool. It's very difficult to pick. And if you pick all those large numbers, let's say like 100 or 150, you might not be able to keep track of them. You might not be able to read them, right? So it'll be very difficult for you to manage. Now, let's say that you still do it. The B side becomes as if some go up and some come down, the net might not be as great. So they don't advise this. Then there's also research that shows that if you have, let's say, top 5 choices of best stocks, but you have a list of 30 that are looking really good to you, they said, why don't you just invest even the rest of the money rather than in everything else into those 5 that you really believe in, you really like them, and you understand them, rather than putting everything else in 30 or 100 stocks. So all that concentrated position in 5 will lead more returns than, let's say, you were invested in 100 stocks, because 95 of those stocks are definitely rating below those 5. So example would be if one stock's going to triple, let's say in 10 years, top one, and that the stock that's on 100 on the list is only going to double, then why don't you put your money into triple as well? So that's the reason. And then there's always a thought that, don't keep all your eggs in one basket, diversify. I think he's kind of against all those things. He says if you really know, then you should concentrate, right? And some of the extreme examples would be with my career. I don't diversify my career. People don't say, you know what, I'm going to have 5 different careers so I could do 5 different jobs just in case if I don't do well in one. We concentrate ourselves into usually one career, one pathway we're going to run. We kind of live our life that way. One house, we concentrate everything in one house. We don't buy 5 different houses and live in 5 different places. Same thing with car. We don't get 5 different cars. And I think even spouse, we like to have one spouse rather than maybe 10. So anyway, just kind of extreme examples why we do concentrate in a lot of other places, but when it comes to this thing, we always kind of make a big deal out of it. And that's the reason. The reason for that is we don't put a lot of effort in picking those companies. Moving on to this, his next biggest point is why you should concentrate. Again, it would add more things to it. If if you're busy, you probably won't have a lot of time to keep track. So if you invest in only areas that you know, and continue to read the annual reports and about the company for those five, if something is going wrong that you don't like, you'll be probably one of the first one to exit out of that position before things go wrong. So that helps as well. Now, if we move on to some other people, let's say his partner Charlie Munger would say, you know what, pick one or two, and that's good enough for lifetime. Look at Jeff Bezos, look at Bill Gates, look at Berkshire, look at Charlie Munger himself. Did pretty good with the Costco business. And then both of them have a student who I follow, Manish Babrai. He usually says 10. 10 will do the magic. If you have 10% each, it's pretty easy. And if one or two goes down, you still have 80% of the portfolio. I go a step further. I would say, you know what, if you have 10, you could always invest those 10 in 80% and then have 20% of your portfolio to fulfill your desire of some companies that you like, or new high risk company, but you want to invest, you want to feel it. You know what, that's your play money. Keep those money separate, keep emotion separate, make sure you have emergency fund, and you could do that way. Alternative option is if you are the person who doesn't have a lot of time let's say if you have a lot of time, I guess even 15 stocks, even up to 30, you might be able to manage if you're a full-time investor. Now, if you're not a full-time investor, you probably need to cut down to 10. And if you're one of those people who are saying, you know what, I don't care about the business, I don't want to read annual report, I don't have time, I don't like it, or whatever. In those cases, investing in either very famous businesses that you really see, you could feel them, you're using them, like Apple and Amazon, might make sense. But if not, then the best option is to invest in index fund. Index funds such as S&P 500 only, probably, I should say. VOO is the ticker symbol. I think it'll be a great option to invest in on monthly basis and not to worry about where the prices are. I like dollar cost average. I like to invest on regular basis, and that should lead good return. Now, in summary, I think now we know that Warren Buffett is still concentrated, and diversification probably doesn't work as well as we think. And then for another term that one should understand in this platform, we will continue to talk about it in our audience, is runway. What do we mean by runway every time we say it? Just like an airport, the plane has a runway that it takes off. The longer the runway, the better it is. So we're talking runway as age, from now to when I die, or retirement, or whatever. Younger you are, the longer the runway we're anticipating. The older you are, the shorter the runway we're anticipating. A runway is time. Time is the best compounder in this kind of investment. So I would encourage you to hop on and take the advantage of the time. Prices don't mean much when you have a long runway. So not to worry about where we're heading. Don't predict short-term market going up or down. Leave the noise out and invest. Again, thank you, Sabina, and let's come up with more questions, concerns, topic to talk. I think we'll have fun. Thank you.